The last few months were very tough for Apple. 1 month ago, the company shockingly announced that it will stop producing iPhones soon. 2 weeks ago, Apple made a decision to leave China forever. And the current state of affairs is unfavorable as Apple's revenue, profit, and sales for the previous quarter have fallen below anticipated levels, leading to a significant decrease in the stock price. During the important holiday quarter, the company's overall sales were approximately 5% lower than the previous year, which is the first time since 2019 that Apple has encountered a year-over-year decline in sales. In recent years, Apple has garnered a reputation for exhibiting monopolistic behavior and efforts to exclude competitors from its platforms. For example, in 2022, Apple has been accused of abuse of power, exerting control over the App Store to favor its apps and services over those of competitors. And while these claims might be unsubstantiated, as of now, they still account for bad PR, even though Apple has denied any wrongdoing. However, the record $1.2 billion fine that French antitrust authorities imposed on Apple says otherwise. This fine came as a result of an investigation by the French Competition Authority, FCA, into Apple's business practices in the distribution of music, books, and movies through its iTunes Store. The FCA is an independent public authority responsible for enforcing competition and consumer protection laws in France. And this is not the best period for Apple for sure. The tech giant's earnings, profits, and sales in multiple segments fell short of expected levels, resulting in a decline in the stock price during extended trading. The company's overall sales during the holiday quarter were around 5% lower compared to the previous year, which signifies the first instance of a year-over-year sales decline since 2019. And as per Tim Cook, 3 primary factors affected the results, including the strong position of the dollar, production issues in China impacting the iPhone 14 Pro and iPhone 14 Pro Max, and the overall macroeconomic environment. The investigation into Apple's business practices was launched in 2018 after the FCA received several complaints from companies that claimed they were being treated unfairly by Apple. These complaints alleged that Apple was using its dominant position in the digital content market to impose restrictive rules on companies that wanted to sell their content through the iTunes Store. According to the FCA, Apple required companies to sell their content at a fixed price, which meant that they could not offer discounts or promotions to customers. In addition, Apple also required companies to sell their content exclusively through the iTunes Store, which meant that they could not offer their content through any other platform or retailer. The FCA argued that these practices restricted competition and hindered innovation in the digital content market. By requiring companies to sell their content exclusively through the iTunes Store, Apple was able to control the distribution of digital content and limit the ability of other companies to enter the market. This, in turn, enabled Apple to charge higher prices for its products and services. After conducting a thorough investigation, the FCA concluded that Apple had engaged in anti-competitive behavior and imposed a record $1.2 billion fine on the company. The FCA also ordered Apple to modify its business practices to comply with competition laws and promote fair competition in the digital content market. Apple has appealed the fine, and the case is currently being reviewed by the French courts. However, the FCA's decision has significant implications for Apple and the broader tech industry, specifically for tech companies that engage in similar business practices. The FCA's investigation and fine serve as a warning to other tech companies that they must comply with competition laws and avoid anti-competitive behavior. Tech companies that engage in restrictive practices, similar to those used by Apple, could face similar fines and regulatory action. Also, the FCA's decision could also have implications for consumers. By imposing the fine and ordering Apple to modify its business practices, the FCA is attempting to promote competition and innovation in the digital content market. This could lead to lower prices and more options for consumers, as companies will be able to offer their content through multiple platforms and retailers. In addition, Apple has other serious issues. Apple's primary product, the iPhone, generated revenue of $65.8 billion, which fell short of the anticipated $68.3 billion and declined from last year's $71.6 billion. Although the latest iPhone represented a considerable upgrade from its previous version, the Chinese factories that manufacture the popular Pro models remained closed for several weeks during the quarter due to pandemic restrictions. Apple's capacity to generate significant revenue is reliant on its products, but the company has faced significant production difficulties for some of its most sought-after products recently. Having been established 46 years ago, Apple has experienced numerous challenges and successes before becoming the largest company in the world, consistently generating impressive sales and revenue figures. Nonetheless, the current outlook in 2023 is not optimistic, especially being accused in several anti-competitive behavior and various lawsuits because of this issue. As everyone knows, it is not exactly uncommon for app developers to pay a fee to have their apps listed on the digital store, be it the Play Store, Amazon App Store, or Apple's very own Apple Store. However, the rather sizable 30% fee that Apple charges app developers to list their apps on the App Store has been a source of massive controversy in the tech industry. There have been several high-profile cases in which app developers have publicly criticized the App Store fees. For examples, the creators of the popular email app Hey Email launched a public campaign against the App Store fees, arguing that they were unreasonable and that Apple was acting as a gatekeeper to the app market. Apple has defended its App Store fees, arguing that they help to maintain the quality and security of the platform, and they are in line with industry standards. Apple has also pointed out that the App Store has helped to create millions of jobs and has contributed to the success of many small businesses and developers. Some developers and tech industry figures have argued that the fee is too high and it gives Apple too much power over the app market. These tech industry figures include Elon Musk, who has argued that the fee is too high and it gives Apple too much power over the app market. Commenting on the fiasco, Musk tweeted, "Apple's 30% App Store tax is a higher percentage than developers pay for credit card processing on other platforms. It should be a lower percentage, as developers are also responsible for marketing, customer support, and other expenses." Musk's comments on the App Store fees reflect a wider debate in the tech industry about the power of dynamics between tech companies and app developers. And the Apple CEO commented on all of these issues. Tim Cook stated that the production level is currently meeting Apple standards after experiencing a decrease in production during the previous quarter. Cook clarified that the overall macroeconomic climate has had an impact on the sales of several Apple products, including the iPhone, Mac, and wearables like the Apple Watch. Sales of both iPhone and Mac have declined year over year, whereas other products such as headphones and wearables, such as AirPods and Apple Watch, have experienced a sales drop of more than 8%. That's it for today. Subscribe to our channel and hit the notification bell.